Hey everyone, if you're holding XRP right now, you need to pay very close attention because we are sitting at one of the most critical price levels we've seen in months. XRP is hovering right around 137, and this isn't just another random price point. This is a level that could determine whether we're about to see a significant bounce back toward $1.60 and beyond, or whether we're looking at a breakdown that could send us back to $1.20 or even lower. The next few days, possibly even the next few hours, could be absolutely pivotal for XRP holders, and in this video I'm going to break down exactly what's happening, what the smart money is doing, and most importantly, what you should be watching for to make informed decisions about your position. Now, before we dive deep into the charts and the data, let me be crystal clear about something. Nothing in this video is financial advice. I'm not telling you to buy or sell anything. I'm simply sharing my analysis of the current market situation based on the latest data. And you need to do your own research and make your own decisions based on your personal financial situation and risk tolerance. With that said, let's get into what's actually happening with XRP right now, because the picture is far more complex and interesting than most people realize. So where exactly are we at this moment? As of today, February 14th, 2026, XRP is trading between 1.37 and 1.39, with a massive 24-hour trading volume of approximately $2.7 billion. Now that volume number is important because it tells us there's real conviction on both sides of this trade. XRP maintains its position as the fourth or fifth largest cryptocurrency by market cap, sitting at around $83 to $84 billion, which is substantial. But here's where things get interesting and a bit concerning for bulls. Over the last 24 hours, we've seen XRP decline by about 6.5%, and if we zoom out to the weekly time frame, we're looking at a 6.3% drop over the past 7 days. This isn't just noise. This is a meaningful pullback, and it's happening at a very specific technical level. Let me explain why this $1.30 to $1.35 zone is so incredibly important. This range has historically acted as what technical analysts call a demand zone. What does that mean in plain English? It means that every time XRP has fallen into this price range in the past, buyers have stepped in with enough force to absorb the selling pressure and push the price back up. Think of it like a trampoline. The price falls, hits this elastic zone, and bounces back. We've seen this pattern repeat multiple times, which is why traders are watching this level so closely right now. The question everyone is asking is, will the trampoline hold this time, or are we about to fall through? Right now, XRP is sitting just above this critical zone. We're at 137, which means we're literally testing the upper boundary of this support area. If we can hold here and start to see buying pressure come back in, the next levels traders are watching are $1.40 to $1.45 for immediate resistance. Breaking through that range with volume would be the first sign that buyers are taking back control. But the real prize, the level that would confirm a trend reversal, is up at $1.60. That's where we've got a much stronger supply region, meaning sellers have historically defended that level aggressively. Getting back to $1.60 would represent about a 16% move from current levels, and it would completely change the sentiment around XRP. On the flip side, and this is what has people nervous, if we break below this $1.30 to $1.35 support zone with conviction, the next major level of support doesn't come until $1.20. That's another 10% drop from where we are right now, and psychologically, that would be a tough pill to swallow for many holders who've been waiting for XRP to break out. So you can see why this moment matters so much. We're literally at the make or break point. Now, here's where the story gets really fascinating, because while the price action might look scary to some people, there's a completely different narrative playing out behind the scenes with institutional players. Just recently, we learned that Jane Street, one of the biggest trading firms on Wall Street, has disclosed major holdings in multiple spot XRP ETFs, and they're not alone. Goldman Sachs and JP Morgan Chase have also disclosed positions in these funds. Think about that for a second. These are the same institutions that many crypto skeptics said would never touch XRP. Yet here they are, accumulating positions, while retail traders are panicking about the price drop. This is classic institutional behavior. They don't buy the top, they accumulate when everyone else is fearful. And it's not just American firms either. Over in the UK, Aviva Investors, which is one of the largest asset managers in the country, just announced a partnership with Ripple to tokenize funds on the XRP ledger. This is huge because it's not just about speculation anymore. We're talking about real financial products, real funds, being built on top of XRP's infrastructure. This is the kind of institutional adoption that the XRP community has been talking about for years, and it's finally starting to materialize. There's also Evernorth, which is set to close a transaction in Q1 2026 to become the largest publicly traded XRP treasury company. They're aiming to raise over $1 billion, let that sink in. $1 billion specifically allocated to building an XRP treasury That's not speculative money. That's strategic, long-term positioning by a company that clearly believes XRP is going to play a significant role in the future financial system. But hold on. Before we get too bullish, we need to talk about the other side of this institutional story because it's not all sunshine and rainbows. Despite all this positive news about firms taking positions, XRP ETFs recently recorded a $6.42 million net outflow. Most of this was driven by redemptions from Grayscale's fund. Now, to be fair, the cumulative net inflows since these ETFs launched have still exceeded $123 billion, so we're still net positive overall. But the recent outflow does show that not everyone is convinced right now, and some investors are actually taking money off the table. This creates an interesting tension. Smart money is getting in, but some money is also flowing out. It's a tug of war, and that tug of war is playing out in the price action we're seeing at this 137 level. Let's also talk about what happened on February 5th, because if you were watching XRP that day, you probably had your heart in your throat. XRP absolutely tumbled, dropping more than 16% to around $1.29. Even worse, this crash triggered about $46 million in derivatives liquidations. What does that mean? It means that traders who were using leverage to bet on XRP going up got completely wiped out when the price dropped. Their positions were automatically closed by the exchanges, which created even more selling pressure and pushed the price down further. It was a brutal cascade effect, and it's exactly why derivatives markets can be so dangerous. That event is still fresh in traders' minds, which is why there's so much nervousness around this current support zone. Nobody wants to see a repeat of that liquidation cascade. Now, while all this price action has been happening, there's also been some really important technical development on the XRP ledger itself that hasn't gotten nearly enough attention. On February 12th, just 2 days ago, the XRP ledger activated something called the XLS85 amendment. I know that sounds technical and boring, but stay with me because this actually matters. What this amendment does is bring native escrow functionality to all trustline-based tokens and multi-purpose tokens on the XRP ledger. In simpler terms, it makes the XRP ledger more versatile and more useful for different types of financial applications. Think of it like adding new tools to a toolkit. The more capable the XRP ledger becomes, the more use cases it can support, and the more valuable the ecosystem becomes. Ripple has also launched an EVM-compatible sidechain, which is huge for developers. EVM stands for Ethereum Virtual Machine, and basically, this means that developers who've been building applications on Ethereum can now easily bring their projects over to the XRP ledger without having to completely rewrite everything. This opens up a whole new world of decentralized applications that could be built on XRP's infrastructure. These are the kinds of technical improvements that don't move the price immediately, but they lay the groundwork for long-term value creation. Speaking of things that could move the price immediately, we need to talk about what's happening today in the macro environment because it could have a massive impact on XRP and the entire crypto market. Today, February 14th, the US is releasing its CPI data, which is the consumer price index, basically the key inflation number that everyone watches. Why does this matter for XRP? Because crypto markets are increasingly correlated with traditional markets, and inflation data can trigger huge moves across all risk assets. Analysts are suggesting that this CPI release could trigger 5% to 8% intraday swings in major cryptocurrencies, including XRP. That means we could see XRP move from 1.37 to either 1.47 on the upside or down to 1.26 on the downside, all in a single day, depending on whether the inflation numbers come in hotter or cooler than expected. If inflation comes in lower than expected, that's generally bullish for risk assets because it suggests the Federal Reserve won't need to keep interest rates as high, which is good for growth assets like crypto. But if inflation comes in hotter than expected, we could see a sharp sell-off as traders price and the possibility of rates staying higher for longer. So if you're watching XRP today, you need to also be watching that CPI number because it could be the catalyst that either confirms this support level or breaks it. Now, let's zoom out and talk about the bigger picture for XRP, because there are some really compelling bullish arguments and some sobering bearish realities that we need to address honestly. On the bull side, Ripple's leadership has been incredibly optimistic about 2026. CEO Brad Garlinghouse recently said that Ripple is entering 2026 with a more aggressive growth strategy. He specifically mentioned that the company spent 2 years playing defense, largely because of the SEC lawsuit and regulatory uncertainty, but now they're ready to play offense. What does playing offense mean? It means expanding aggressively, signing new partnerships, and pushing XRP adoption in payment corridors around the world. Ripple's president, Monica Long, described 2026 as a period of institutional adoption at scale. Not institutional interest, not institutional exploration. Adoption at scale. Those are big words, and if they're right, If we really are entering a phase where major institutions start using XRP for cross-border payments and settlements at scale, then the current price could look like an absolute bargain in hindsight. The vision here is that XRP becomes the bridge currency for international transfers, cutting out the inefficiencies of the traditional correspondent banking system. If even a small percentage of global payment flow starts running through XRP, the demand for the token could be enormous. But, and this is a big but, we need to address the elephant in the room. There's a legitimate bear case for XRP that doesn't get talked about enough in bullish echo chambers. The reality is that banks don't necessarily need to use XRP to benefit from Ripple's technology. Ripple payments can provide instant transfers without requiring banks to hold or use XRP at all. This is actually what we're seeing in practice. Many of Ripple's partnerships involve the company's technology, but not necessarily the XRP token itself. Even more concerning for XRP bulls is Ripple's RLUSD stablecoin. This is a dollar-pegged stablecoin that Ripple has developed. And frankly, for many payment use cases, a stablecoin might be better suited than a volatile asset like XRP. If you're a bank moving $10 million from one country to another, do you want to use a token that could swing 5% to 8% in a single day? Or would you rather use a stable dollar equivalent? The answer is pretty obvious, and this creates real questions about how much actual XRP usage we'll see even if Ripple's technology gets adopted widely. Conservative analysts are forecasting XRP to reach around $1.59 to $1.60 by the end of 2026. Now, from our current level of $1.37, that's only about 10% to 15% upside over the course of an entire year. That's not exactly the moon everyone's talking about. Some analysts are even more bearish, suggesting that structural challenges could push XRP toward $100 or lower if the market realizes that XRP adoption isn't keeping pace with Ripple technology adoption. So what do we do with all this information? What should you actually be watching for? Let me give you some specific scenarios and levels to monitor. If XRP can hold this 130 to 135 zone, and we start to see buying pressure come back in, especially after today's CPI data, the first target to watch is that 140 to 145 resistance. If we break through there with strong volume, it would signal that buyers are in control and we could make a run toward 160. The catalyst for that kind of move would likely be a combination of favorable macro data, continued institutional accumulation, and positive news about actual XRP usage in payment corridors. On the other hand, if we break below $1.30 with conviction, especially if it happens on high volume or after negative CPI data, then we need to be prepared for a move down to 120. That level would be the next line of defense for bulls, and honestly, if we get there, we'd be looking at a pretty significant correction from the recent highs. The thing to watch in a breakdown scenario would be whether derivatives liquidations start cascading again like we saw on February 5th, because that could accelerate the move down quickly. Here's my honest take on the situation, and remember, this is just one person's analysis, not financial advice. XRP is sitting at a genuinely critical level. The technicals matter. The $1.30 to $1.35 support zone has held before, but past performance doesn't guarantee future results. The fundamental picture is mixed. On one hand, we're seeing real institutional interest, real partnerships, and real infrastructure development. On the other hand, there are legitimate questions about whether XRP, the token, will capture the value being created by Ripple, the company. If you're a long-term holder who believes in the vision of XRP becoming a bridge currency for global payments, this current price might represent a reasonable entry point or an opportunity to average down if you bought higher. But you need to be honest with yourself about the risks. You need to be prepared for the possibility that we break down to $1.20 or even lower before we see sustained upward movement. Position sizing is crucial. Don't bet the farm on any single trade or any single thesis. If you're a shorter-term trader, today's CPI data could give you the volatility you need to make some moves. But be very careful with leverage, given what happened on February 5th with those liquidations. Set your stop losses, manage your risk, and don't get emotional about the position. The next few days are going to be critical for XRP. We'll get clarity on whether this support holds, we'll see how the market reacts to the CPI data, and we'll likely get more information about institutional flows in and out of the XRP ETFs. Watch the price action closely, watch the volume, and most importantly, watch for any news about actual XRP usage in real payment corridors, because that's ultimately what will drive sustainable, long-term value. I want to hear from you. Are you viewing this as a buying opportunity, or are you concerned about a breakdown? What's your target price for XRP by the end of 2026? Drop your thoughts in the comments below, and if you found this analysis helpful, smash that like button and subscribe, because we're going to be tracking XRP closely over the coming weeks and months. The story is far from over, And whether you're bullish or bearish, you can't deny that we're at a fascinating inflection point. Thanks for watching. Stay safe out there, and I'll see you in the next one.